Well, good evening. It's Monday night. Happy Memorial Day. I hope you all had a lovely Memorial Day weekend. I appreciate you all being here. I wouldn't leave you hanging. Of course, we're going to be here. I'm going to be here on a holiday. Of course, I wouldn't let you guys down. So I appreciate everyone being here tonight. And you saw the topic. And yeah, we're talking about the possibility of now people can obtain a sub 4% mortgage. So yeah, hold on to your hats for this one. And it's pretty exciting stuff. So I'm really excited to talk about this one tonight. But I do want to, before we begin, I just want to say thank you to all of our servicemen, our veterans, our active servicemen, for protecting our country, serving our country, and doing what you all do. And of course, we honor those who have lost their lives for serving our country. So I want to just throw that out there before we talk about anything, because today is very important. It's not all about the barbecues and stuff this weekend, right? We have to remember why we have this holiday. So just wanted to throw that out there. Anyway, so before I get into it, I have to introduce my guest tonight. And actually, I was just on her live stream a little while ago, and I'm so excited that she has the energy to join me on mine. And we're going to be talking about this very same thing. We talked about this on her live stream. We're going to talk about it on mine. And let me welcome back Miss Jen Sylvester. Thank you, Jen, for being here. Wait, I have to do it. I have to do it. Hold on. There we go.
Oh, very nice.
Yeah,
very nice.
You see, I had
very
to do
nice.
It. All right, are you impressed?
Yeah.
I'm actually getting little sound effects. I'm not
Yes.
I'm not the master like you, but you know, I try.
Really?
I knew you were going to do that. Okay. All right. Jen, how are you?
I'm doing great.
Good.
I'm doing great. Thank you. It's always fun. Jump on your stream. You always have a great interactive community. So
yes.
This is going to be fun. I'm always excited about it. So
I'm excited to have you here. So yeah, and we're all in our casual shirts. It's obviously a laxed day today, so we can be in our t-shirts. I got my band mom t-shirt on. It's at our kids, my daughter marched in the Memorial Day parade this morning, and I just haven't changed out of it because I'm like, you know what? I'm just chilling today. I'm just chilling.
Why not?
Yeah. So Jen. Let's talk about
Jackie.
The chances of the opportunity for people to get a, say, 3% mortgage. And that is through an assumable mortgage. And
correct.
This is now becoming, it's not a new thing. They've been around a long time, right? As you said in your live stream, they've been around for years. And now it's becoming a thing because people don't want to pay the 7% interest rate. So now they're throwing out, let's find those assumable loans for people to take advantage of. It's great in theory. They're not that easy to get and to go through the process and get approved to get that assumable mortgage. So
right.
I just want to share with everybody, let's go over it really quick. What is an assumable loan? Before I go into the whole, actually, no, we'll go into the article. So mine came from, Jen, my article is a little different. This is from Fortune.
Okay.
I gotta zoom in here. How did you zoom in, miss? You were like,
oh, yeah, you just do the, take your whole screen and just shrink it. But you could also just, on the upper right, 3 dots, you can pull that down and increase the screen size.
Oh, there you go.
Yeah.
I got you. There you go. Like that? I don't know if I did it right.
Oh, no, not quite, but that's okay.
Okay, it's okay.
You pushed us on the screen. Please stand by.
Please stand by.
Stand
okay.
by.
All right, guys. Okay, so let's just check this out right here. So it says here there's a way to land sub 4% mortgage rates for the buyers locked out of the housing market, but they've been hard to get until now. I can't even talk. My God.
It's all good.
Okay, so now with mortgage rates, thanks, Jen. A little punch drunk. With mortgage rates With mortgage rates continuing to hover between 7 and 8%, it's been challenging, near impossible for home buyers to break into today's housing market. High monthly prices coupled with the lock-in effect in which homeowners are reluctant to let go of their sub 4% mortgage rates have prolonged the frozen housing market. But there's one little known trick for landing a lower rate: assumable mortgages. Earlier this month, Rome, a company that specializes in helping buyers find homes with sub 4% mortgages, they can take over. They announced a new feature in which buyers can purchase a home with a 2% mortgage included and a down payment as low as 15%. So let me just go back and explain a little bit what this is all about.
Adjust your screen so you can get us back on the screen there.
I'm trying. Here we go. Exit full screen layout. There we go. Okay.
There you go.
Okay, you can see me now. Okay, cool. So assumable loans, what it is now, this is only you can only do this for a VA, FHA, or USDA loan. If someone has a conventional loan, you cannot assume that loan. And these loans, right, they're between, some got 2.5%, some 3%, below 4%. So what happens is somebody has their mortgage and say there's like $250,000 left on that loan, right? Say there's a $500,000 house, they still owe $250,000. You can only assume what the balance is on that mortgage. So $250,000, right? So if you need more than that, right? So say if you have, right, am I saying this right, Jen?
Yeah, you're right. You're
you
right
can
on.
Only
You're
assume
right on
the 250 at 2.5, say 2.5%. If you need to borrow more, right?
You have to make
can't
a difference.
do that. So say if you need to get like a $300,000 mortgage, you cannot do 2.5% on 300,000. It's only on the 250 of what that homeowner owes
Correct.
on that mortgage. Okay. So what they're talking about is if you want to cover that gap, you can take out an additional loan to cover that gap between the mortgage and the purchase price.
Correct.
Okay. So you need, say, $500,000 home, you need another $250,000. Say you're putting $100,000 down, you can only get, then you could have the opportunity of getting another loan. So this is what Rome is doing. They're offering that second mortgage at a lower rate in order for you to get the home.
Yeah. Well, Rome website is primarily, first and foremost, is just a search website to allow you to find which properties have assumable loans, right? And then they launched literally like last week. It was a week or a week and a half ago.
Yes.
They launched a service that they're connected with lenders to offer that bridge, that gap loan, that second mortgage. You don't have to get it through them, but you can get it. You know, they make the process supposedly easier to get that second mortgage. But like what we were talking about was, you know, if you have, say you're buying a house that is $400,000, use round numbers, right? And the mortgage, the outstanding mortgage is $250,000, and maybe a $50,000 down payment, right? So now you need an additional $200,000, right? Somewhere, somehow. Well, the reality of it is that if, or it'd actually be 100,000. Am I doing my math right? 400, 250, 50 plus 50, 300. You need an extra $100,000. So the logic behind it is that $250,000 assumable loan, and on these websites, it tells you on the, there's the Rome website, there's a couple other websites that are launching, getting on board with this.
Yes.
They tell you what the predicted balance is. Now, the predicted balance is not going to be known to them in particular. That's private information between the borrower and the bank. However, they have access to the information of how much the loan was taken out. It's part of the public record and registry of deeds, right? Yep. So they go on that number, and then they tell you what that interest rate, because the note is public information at the registry of deeds. So you can go through and shop and be like, this house is listed for $500 and it's this interest rate and this is the amount and all that. And then you just have to decide, you know, if I'm going to get a $250,000 mortgage at 3% and a $100,000 mortgage at 7 or 7.5%, you know, how much am I going to save if I were to go elsewhere, you know? And the reality of it is, depending on, there's so many factors, right? That involved in terms of, the process of finding the loan, the finding the property, and all this type of thing with that Rome website.
Yep.
But you're right. You're right on target. In theory, it's all nice and easy on paper. In practical application, not so much.
Not so much.
Not so much.
I'm just going to share the site we're talking about. This is Rome. This is the website that they're talking about in fortune.com. So basically you can just type in whatever the city, state, school, zip code, whatever. But the thing is, there are not that many available, right? We just did this on Jen's live stream. It's like, say if I type in New Jersey, right? Can we all see that?
Yep.
There's nothing. There's no.
Same with Massachusetts.
Get notified when Rome is available in New Jersey, and it's the same thing, right? So in Massachusetts, it's not available there. So you know what, Jen? I'm just realizing. I think it's because, it says you're getting notified when it's available. So they probably haven't. Maybe they're just not available in our states yet. But if we go into Texas, check this out, guys. Hold on. It's a little slow. Here we go. Please hold. Where are you?
Oh, wait a minute.
Here we go. Okay.
I got you.
Awesome. I knew I can count on you. Thank you. All right. So check this out. Like, look at Texas. This is insane. So if you look over here on the right side, it says your Rome rate, 4.25%. It tells you what the principal and interest is. And it's 220,000, right? Is that what the gap would be, or is that the price?
I can't see it. You make it. Which one are you talking about now?
It's the top right here on the right side. The first house I'm looking at here. It says 4.25, and then
yep.
All right, so down. It says
yes,
220
correct.
with a thousand down. So that's the.
Yeah, if you click on it, it'll give you that information.
Hold on, that would help, right? Jeez. Okay. All right. So the price is 220,000.
Yeah, that part when you clicked on it, we can't see the screen when you clicked on it, but that's okay.
Sorry. Hold on. Share this tab. Hold on. Can you see it now?
There we go. Oh yes.
God, I'm sorry. I'm so slow tonight. But anyway, so 220, 1,000 down, and an interest rate of 4.25.
And it tells you the number of years on the loan.
Yep. The remaining terms, 29 years, 5 months. Wow. It's like almost a full loan. Okay.
It's almost a full loan. So that's important for borrowers to know.
Yes.
It's important for borrowers to know that, when you're doing an assumable loan, absolutely 100% nothing changes on the loan except the name.
Exactly.
So everything on that loan becomes yours. The amount of time left on it, the rate, the terms, but you also have to qualify for that loan. So for example, VA loans, this applies to FHA, VA, USDA. VA loans can be assumed by non-VA, by non-vets. Right. So regardless of whether you're a vet or not, you can assume a VA loan, but you still have to qualify for the VA parameters. And what that means is when you buy a house using a VA loan, they require certain condition aspects like peeling paint and rotted wood and different things like that that might compromise the house. So you still have to qualify for that. So a standard pre-approval is not good enough, but it could potentially save a ton of dough. If the seller agrees to it. If the seller agrees to it.
Yeah.
Because that's all part of the negotiation, right? It's all, you have to put it in an offer to negotiate it. Because, for example, on the VA loan, a vet, when they get a VA loan, they have that VA certificate, that entitlement to get that VA loan. Mm-hmm. That certificate, that entitlement, they don't get that back when the mortgage isn't assumed.
Right.
That even though their name is off, they don't get their entitlement back until the new borrower either pays off the mortgage or refinances.
Correct.
Then they get the entitlement. So if their intention is to use that on another property, then they may say, no, I'm not participating. I'm not interested in having you, Mr. Buyer, assume this loan.
Exactly. Right.
So the sellers have to agree to it.
Right. But But that's really applies to people who have that VA entitlement. So if you have FHA, USDA,
Correct.
that doesn't, that's not really going to be a detriment to the seller. Just get those. We got tons of comments already. Hi, Kate.
Yeah.
Welcome back, Kate.
I tried participating in the comment, and just to let you know, Jackie, this comment has failed to post to Jackie Baker. So Jackie Baker, you're not letting me post in the comment. I was trying to paste the Rome website.
I just did. Yeah, for all of you who have asked, I just posted the link.
Perfect.
So, okay. They
are now proposing portioning mortgages.
They're now proposing portioning mortgages. You transfer your current mortgage to a home of an equal or greater value, and you get to keep your interest rate.
I have never heard of this.
Me neither. Oh, we're gonna have to look into that. Look who's back. Hello, David. Thank you.
Oh, he's such a great guy.
You're the best.
He is the best.
Mama Four says, search New York Post portioning mortgage. If they start doing this, it'll change the housing market significantly. Yeah, big time.
I would think that the banks though, so here's the thing, Jackie. Okay, who makes out with these higher interest rates? The banks.
Exactly.
Right?
Yep.
So what motivation would a bank have to approve a loan like this?
Right.
The assumable mortgage, those are conditions written into your note.
Yep.
The bank has no bearing. That's an FHA thing. That's a VA thing. They have nothing. They can't approve it. It's in since 1934 when FHA mortgages started being written. Every mortgage is assumable. But this type of thing, if the banks have to offer it, my question would be why?
Right.
Right?
Right.
Exactly. I guess, I don't know.
Yeah.
Trying to be devil's advocate here. Sounds like they're great, interesting though.
All right. Juliana Rosero, thanks for being here. What are the down payment trends right now, especially in North New Jersey? Are people still putting 20% down when houses we are going 50 to 100K? We're asking. Yes, it's 20% and higher. And higher. Like my people I've lost to significantly higher down payments. That's usually what's hurting us. It's how much we're putting down. It's unfortunate, but it is the truth. So really quick, I want to go back to the Fortune article 1 second. And I apologize, I'm not zooming in. I don't have the tech skills like you do.
I'll show you after.
Yeah, show me. I should have asked you that beforehand. Darn it.
Hey, it's all good.
Okay. So you're talking about what? So what does assumable mortgages mean for lenders and for banks? Although loan assumptions essentially take over an existing mortgage, it could seem like a bad deal for lenders. Like I said, there is a fear that assumable mortgages could be harmful because lenders want their mortgages to be a reflection of the current rate environment to make sense for them. At the end of the day, mortgage lending is a business, and banks don't want to always be lending at significantly below market rates. And while there's not much light at the end of the tunnel in terms of mortgage rates potentially dropping, they'll eventually fall some. When rates come down, no one would choose to assume a mortgage with a higher rate. No kidding. So another thing I wanted to, another quick thing I wanted to share. Hold on 1 second. So I just wanted to talk about, I found this on Bankrate. Where'd you go? Bankrate.com, talking about assumable mortgages. Here we go. So just to break it down again for people who are just coming on right now, what types of mortgage loans are assumable? It's FHA, VA, USDA loans. So again, you need to meet the standard FHA loan requirements. These include being able to make a minimum down payment of 3.5%, credit score of 580. VA loans, this is what the cool thing is. You don't have to be a member of the military or a veteran to assume a VA loan. But the lender will still evaluate your creditworthiness as a borrower. While there isn't a minimum credit score, the lender will typically look for a score of 620 and above, and you still have to pay the VA funding fee. USDA loans are most often assumed with the new rate and terms, but in some cases, like transfers between families, it can be assumed with the same rate and terms without needing to meet eligibility requirements. To assume USDA loan, you typically need a minimum credit score of 620. You also have to meet income limits and location requirements. Now, Jen, we were talking about conventional mortgages, that they're not assumable. However, it does say here, most conventional mortgages, the most popular type of loan, are not assumable. They contain what's called a due on sale or due on transfer clause, which mandates the mortgage to be paid in full whenever the original borrower sells a property or transfers the loan. That said, in special circumstances, you can assume a conventional loan. To know whether your mortgage is assumable, look for an assumption clause in your mortgage contract. So that's interesting about that. Now, I think that talking about assuming a mortgage after death or divorce, right? So this is what they're saying.
Right.
Mortgage assumptions can happen outside traditional real estate transactions. A family member or sometimes even non-relative can assume an existing mortgage on a home they've inherited. If one person is awarded sole ownership of a property in divorce proceedings, that person can assume the full existing mortgage themselves. Pros and cons of assumable mortgages. The buyer gets a lower interest rate, so they get the benefit of assuming the mortgage, the ability to take on the seller's lower interest rate. The pros for the seller. Now, Jen, we talked about this before in your live stream. The seller might attract more offers. If you're a seller and your mortgage has lower than market interest rate, you could draw more buyers, especially if you haven't built up much equity in the home. The cons. Buyers can't assume conventional mortgage in most cases. The buyer might not be able to find options unless it's advertised in the listing description or your real estate agent can otherwise find the information. It's often hard to learn which homes come with assumable mortgages, and this is why Rome came into play to show you where you can get them. The buyer still needs to qualify for the loan. Unless it's a case of death, you still have the credit and finances to be eligible for the loan you want to assume. Buyer needs to pay the seller their equity stake. While you take over the seller's mortgage and repay that over time, you're only assuming the outstanding balance. You still need to pay the seller the remaining cost of the home, either out of pocket or with another loan. The seller might still be responsible for the debt. If the buyer doesn't make payments and your lender hasn't sufficiently released you from the debt, your credit could take a hit. That's interesting.
Yeah, I don't see how. I mean, that's all part of, that liability release that would happen at closing.
Yeah, exactly.
I don't. That's interesting.
Yes,
that's interesting. I haven't heard that. I mean, how is it that a buyer would be willing? I don't know. How's a buyer going to be willing to able to pay a mortgage, but the seller's name is still on it? So what? Both their names are on it. I mean, the thing is the lender that does this assumable process, they have to qualify the loan. They have to qualify the buyer, go through all the closing attorney, and they have to go through a full closing. So how would that get through? I mean, it depends on which state you live in, I guess. Here, the title companies would never approve it if it had the seller's name on it.
Exactly.
So I don't know. That's interesting.
I
don't know. I'm not a mortgage. I'm not a mortgage license, so I don't know.
Wait, before we go to this question, I just want to see New Jersey female. Is this coming to Jersey? I hope it is. I don't know. I mean, this is brand new, this Rome website. So coming soon, hopefully, to the Dirty Jers. We'll see. Jackie, why would people be willing to give up a home with an assumable mortgage? Well, like they said before, it could, to say it's a slower market, say if things calm down a little bit, right? And you want to attract a buyer and interest rates are above 4%, this would be a nice little thing in there to put, to say, we're at, this is our list price. We're also offering an assumable mortgage at, say, 3.5%. So that would definitely attract more buyers. So that's why somebody would do that. It's more like a little, incentive for somebody to buy. He also asked, do we happen to know if it makes sense to ask for a seller to cover closing costs within this seller's market? Depends on your market. Now, I will tell you, our property that I'm selling down in Delaware, the market has slowed down. And we are actually going to give a little bit of concession, closing cost concession. And we're doing that because, we are going to do pretty well on the sale of this. We're like, you know what? It's okay to help this guy out. And come to find out, it's becoming more common down there. Here in New Jersey, oh no. And I'm sure it's the same in Massachusetts. Are you seeing concessions?
Not really. I mean,
Yeah.
I mean, far and few between,
Yeah.
because I mean, so here's the thing, and it always comes down to this: if the property is priced right, so it's attracting the right audience and the right number of buyers. You have a property that's priced overpriced, and you know, even in a hot market, a house that's overpriced is going to sit.
Yep.
And so if those houses that sit, and then the longer it sits on the market, the more people are like, what's wrong with this house? And then they might have to buy back some of that attention with the seller concession, but it's not as common. I think you're looking at like the states we were talking about, you know, the areas, the metros that are feeling it the most, that have, you know, pre-pandemic inventory levels at this point.
Yep.
Those are the areas that are probably going to find the assumable, you know, marketing with the assumable mortgage possibility is going to be the most beneficial to them, you know, not you know, to help themselves stand out in front of their competition.
Right. Yeah. So say, like we were saying, like states like Florida, parts of Texas, where the inventory is growing.
Phoenix.
Phoenix, you'll definitely see more of the concessions being offered there. You have an opportunity to ask for concessions. All right. We have a question here from Beardzilla. I'm closing on 612. Sorry. I'm closing on 612 at a 6.25 interest rate. Wow. That's good.
That's awesome.
My lender said I could buy the rate down to 6.125 for $990. Should I do it?
Depends on how much the mortgage is for.
Yeah.
You got to look at, you know, you got to look at what you're saving versus what you're spending, and then what the recapture is. I mean, if you're saving yourself, you know, a couple grand, you know, and because you got to look at the total recapture for the entire loan.
Yes.
You know, after the course of the 30 years, what's that extra, what's that increment from 6.125 to 6.25? What's that 30-year amortization costing you?
Exactly.
That little increment. And I can almost guarantee you it's more than $999.
It's going to be a lot. You might be better off to do, you might be, I would do that. But listen, get all that detail from the lender.
But it also depends on how long he's going to be there.
Exactly.
Because if he's only going to be there for a couple of years, then it doesn't make any sense, because now it doesn't, like, amortization and recapture. I mean, you don't see, it doesn't flip between interest rate and principal balance until like 7 years. So, you know, it doesn't, you know, if you're not going to be there if you're going to be there for less than, you know, 4 or 5 years, probably, but you got to do the math.
Yeah.
You got to do the math.
You got to do the math. Have your lender do the math, show you the numbers. Well,
you can go online to an amortization, you know, calculator, and put in your loan amount, and then compare the numbers and see what the 30 years is going to cost you.
Yep.
That's what I would do.
Okay, David, I believe if another veteran assumes a VA loan, the seller can keep their VA certificate of eligibility. Oh, that's interesting. Okay. All right. Okay, very cool.
I'll go with, if I have to choose between my research and David, I'll vote David.
Me too.
And say, you know what, because David said so.
We trust David. David's the bomb. All right.
Yep.
The lender must approve the new assumable mortgage borrower. At least my VA loan says.
That is correct.
Yes, that is correct.
You know what? Now, and Jackie, I know that we were talking about this earlier. The thing that, as a buyer, that you're going to need to know is, if you decide to go through this, you live in an area where this is a beneficial way to buy a house, and you're making an offer on a property that you want to assume the mortgage, you're going to have to talk to your lender and get pre-approved for that mortgage. Not a straight pre-approval.
Right.
Not a straight pre-approval, but you're going to have say, Mr. Lender, I need to be approved for this amount of money for this interest rate, you know, or this amount of money with this program. FHA, VA, whatever it is. You know, and then have them write a pre-approval letter for that program.
Exactly.
So super important.
All right. So Johnny Martinez, what would the closing costs for assuming a loan, and would property taxes increase? That's a good question about the taxes. The closing costs, I would imagine it would probably be the same, wouldn't it? And especially if you're going to take on a second loan to cover that gap.
Yeah, you're probably looking at some extra. I would assume, Jackie, you're looking at some extra fees because of the process that needs to happen on the seller side. Although the seller, so I don't know if the seller, in terms of like discharging the seller off the mortgage, and that's probably just a standard discharge fee. But I don't know. I don't know. I know it's not
I don't know
substantial if it is, but I mean, as far as the property taxes, it's not about the loan. That's about the purchase price. That's all about the purchase price. So your property taxes, like, this is just, the property itself is not going to change. We're just talking about how you get the property, right? So if the house is 400,000, whether you get a conventional loan or a assumable loan, the house is still 400,000. And your property taxes, it has no bearing on your property taxes whatsoever.
No, it doesn't. But I think what they're asking, I think what is like, would they increase? This is how I'm thinking, because I just talked about this recently, where people were struggling to pay their mortgages because their taxes increased after they bought the home, because these counties and towns reassessed the homes because the market has gone up. So,
so here's the thing. Here's the thing is, when you're doing when you're figuring out what your mortgage payment is, you're looking at principal, interest, taxes, and insurance.
Yes.
Right? PITI, right?
Yep.
So what we're talking about with the assumable loan is only the first two parts, principal and interest.
Right.
Tax and insurance are completely separate.
Yep.
And that's going to be regardless of what mortgage product you go with. The principal and interest part of the equation is what we're talking about. So
Yep. Okay.
Be sure to hit the thumbs up.
Yes.
Let's
hit
go.
the thumbs up, guys. Thank you, David. Okay, another question from David. In each of your respective markets, do you have any areas available for USDA financing? Very little here in New Jersey. We do have farmland in South Jersey and Western Jersey, but yeah, it's not a lot.
The thing is availability for financing and available properties.
Right.
Things.
Yep.
If we had, I mean, there's always the programs exist, but the properties don't fit the bill. And the challenge is like, you have these properties that are eligible for USDA, but then you have all these buyers that are coming in that are so approved they don't need the USDA help to buy these properties. They have down payments.
Yes.
So they beat out the USDA pre-approved buyers.
Right. So Jen, look who's back.
Well, hello there.
What are some of the disadvantages of a property that doesn't have an HOA? The disadvantages of a property that doesn't have an HOA?
Well, you could have pink flamingos on your front yard.
You can do whatever the heck you want to your property.
You can have a bright orange. You could have a bright orange front door.
Yep.
And a lime green colored house.
There you go.
It doesn't matter what your neighbors say.
Do whatever the heck you want. You can do whatever the heck you want. So
you can never mow your grass.
Yeah. Yeah, exactly. Do whatever the heck you want. Reed, thanks for being here. Only thing is, you'll attract more buyers. However, they'll need a lot of cash to make it worthwhile for the seller. Yeah, definitely. Oh, wait, here's another one from Ray. I sold 3-family in Southeastern Mass, owed $200,000, sold house for $540,000. The rate was 2.875. No chance a buyer can send me the difference of what I should profit. It's a good point.
No difference. Well, I don't.
Right.
See, that's the thing is I don't know. I don't know that I agree with that, in the sense that, if they sold it for $540,000, if I want to buy that house and I said, okay, I want to transfer that mortgage to $200,000. And I'm going to bring you a check for $340,000 to the closing. And now that $340,000 might be $40,000 out of my pocket and $300,000 second mortgage.
Right.
The seller doesn't have to do anything about that. See, that's the other thing is that with the assumable mortgages, there's a other point of thought with this, is that it might increase sale prices in those areas, because now instead of the borrower having to qualify for, say, on a $540,000 purchase, they're putting, just for argument's sake, even numbers, $40,000 cash down. Instead of having to qualify for $500,000 with a 7% mortgage, now they have $200,000 at a 2.75, and now it's $300,000 at that higher 7% mortgage. They can actually qualify for more money.
Right.
They can qualify they can go up to $600,000.
Yep.
Because they're not locked in. That 200,000 at that low interest rate is now freed up cash in the buyer's pocket to be able, if they choose, they could theoretically go higher.
Right.
On a second mortgage.
Okay. So I just had to go back to the Rome website. I know I'm like all over the board tonight. Because I saw somebody's comment. Is there a catch? Yes, there's a catch. With Rome, they collect a fee of 1% of the purchase price. Okay. So for a $500,000 mortgage assumption at a $550 sales price, our fee would be 1% of the sales price. So that'd be $5,500. So you are paying for this service, but they show you what the savings could be over the first 5 years. When you buy with Rome, you could save up to $20,000 in your first year alone. Net savings over 5 years. You could save $94,500 in your first 5 years of owning your home. So Jen and I said this before. I think it's worth it to pay that fee, but you got to keep that in mind. That's coming out of your pocket too, because you can't roll that into your loan. So that's going to be that is definitely going to be an extra and added cost. But comparing to getting like a 7% or higher interest rate, I think I'd pay the fee. So
absolutely.
Yeah.
100%. 100%. But that's just one option. The Rome is just one option.
Yeah.
I mean, it's all about just finding the property, right? So I think what we're going to see is, I wouldn't be surprised, Jackie, if we saw Zillow and Redfin start to add that in, or even add it as like that one that Assume List is another website.
Yes, let me share that with you. So this is another one. Where'd you go? Hold on a minute. Oh, Jen. I'm all over the board.
It's all good.
All over the board. Hold on. Where'd you go? Assume List. Here we go.
Take your time. We're not going anywhere.
I was waiting for it, Jen. Come on. Okay.
Come on now.
Here we go.
Ooh, Memorial Day sale.
Memorial Day sale. Off. This is Assume List. I will copy this. Let me copy this link right now. It's a veteran-owned company, and it's the same thing like Rome. And here's the pricing. So you can do for $29 a month. And this helps you search for low interest homes with assumable loans, and or you can go pro 49, agent 79, and then you have teams and brokerages. So that's for like real estate brokerages. So
the right two are for the broker. So the thing is like those are monthly fees only when you want to use the site. You could log on the site, find your property, cancel your membership. It's cost you $30 to find out about that property.
Right.
Now you just buy it with your agent or whatever you want to do. That's it. No fees.
Exactly. Yes. So this is another one. I'm going to put this right in the comments, guys, so you can check out that website as well. Oh my gosh, the comments. I love it. I love my audience. Excuse me.
They're your people.
Now look at that.
If you paid $300K for a house exactly 20 years ago, now it is worth $450, which is 50% more, and that matches inflation. The interest rate was the same 20 years ago as it is today. Interesting.
That is interesting. Interesting thought there.
Thank you for that.
Yes, thank you. Okay, Sherry Martinez, thank you for being here. The whole don't have to mow the grass is changing. Some home insurers are using drones now to cancel insurance if they see the house isn't being maintained, and you need insurance to keep your mortgage.
I've heard of that. Yeah.
I've been talking about that a lot, like a couple of videos ago, about the insurance companies and like people getting canceled over just ridiculous things. Bob Curran, how are you, Bob Curran? Thanks for being here. I'm in an HOA. Very first time, complicated to deal with HOA living. Good if you can rent a home out to keep tenant in line. That is true. That is so true, because the property I'm selling right now is an investment. It's in an HOA community, and we put those rules into play. As a matter of fact, the very first tenant we had, the garbage cans, they drive me nuts. If you don't bring the garbage cans in right after they pick them up, there's a lady that was driving around the community taking pictures. and send it. She
Oh,
would
boy.
email it to you. Oh, it was so annoying. So I got the first notice,
You
the
should just
warning.
you should just send her a message and be like, "Hey, since you're obviously you're by my property, can you just put my cans in my driveway?
Exactly.
Since you're standing right there
Right?
taking a picture,
Yeah,
see,
next
that's
time
me.
you're there, just bring them up. Put them
Yeah,
in the
just let me know.
garage. I'll give you
That'd
the
be
code
great.
and everything.
Gee,
Yeah.
thanks.
So, yeah, it is good, but it's a pain. If you did not catch, I did a video 2 weeks ago now about HOAs foreclosing on homes. Scary, very scary. I highly recommend you all go back and watch that because very disturbing. Most properties are being sold for 50 to 100 more than asking price. Are people just making these high offers and hoping to negotiate, assuming the appraisal is much lower? No, and here's why. So this is what goes on here in New Jersey. When a seller, when they're in a multiple offer situation, the seller will put out there what they're looking for, and if you're going to go above asking price by say $100,000, they want to know, number one, are you going to cover the appraisal gap? That's the biggest thing. And then if they don't want you backing out or renegotiating if it underappraises. So that's the big thing. So
Correct.
no, people they're not hoping that they're going to go back and renegotiate. No, and even on inspection. So the other thing the sellers will stipulate is that the home's either being sold as is, or you're only asking for like major defects in the property. You know, if they find any major defects, that's the only thing that they'll negotiate, or you'll waive it. You know, but a lot of times waive the inspection. A lot of them are still. A lot of buyers are still doing that. They're waiving appraisal, waiving inspection. It's insane. But that's how that works. Unfortunately, no, people cannot go back and renegotiate in this market.
Nope.
Yep. So we have here. Oh, he's responding. In my area, Midwest, homes are commonly sold below the asking price by not by much. Well, that's good. So that's good. You go below asking price. Lisa Schuster, question. We used Obama's plan to reduce our interest rate from 6.5 fixed by 1 point to 3.2. It's saving us $1,000 a month, but adds 10 years to the mortgage. We're over 65. Do we keep it? Three living.
That's a tough, there's so many different reasons, so many different pieces of the puzzle there. That's not an easy question to say yes or no.
It's not. Again, you have to look at all your finances. You have to do the math. You have to do the math.
I think, I think it comes down to like, I had a client once that, was literally, I think they were, 60 and buying their first house. And when I first started working with them, they says, am I ever going to get approved for a mortgage? Because I go with 30-year mortgage. She's like, I'm not going to live that long. Are they going to even give it to me? She's like 60 or 65.
Oh, yeah, they'll give you a mortgage.
And,
yeah.
And and it's like, well, yeah, but guess what? I mean, if you pass away and your mortgage is outstanding, well, guess what? They can't take money from you at that point.
Yeah, that's right.
They can't take it from you.
That
so
is true.
I think you gotta weigh it out and see how much of a monthly savings that you have, over the course of the long haul versus what it would be like if it ends up costing you double, and that seriously puts cripples your day to day, Jackie.
Yeah, it does.
I don't know. You know what I'm saying? Like it's some of the parts.
Yeah, you really have to look at your personal situation and what it's going to cost you to go to the next one. Yep. Clark, the realtor, thanks for being here. Yes, some HOAs have in their CCRs that they can foreclose on your property if you don't pay or have increasing fines you fail to pay. Yes. Again, that video I did, I highly recommend you all watch it. It was so disturbing. Like there was a community in Colorado. I think there was like 50 homes that the HOA foreclosed on from people not paying fines. I think it was mostly fines. Some were dues. They were past due on their monthly dues. But like, are you kidding me? And there was a guy in Texas. He was in Air Force. Yeah, he was in the Air Force. He got deployed, went to Turkey or something like that, was going to be gone for 15 months. And he set up his automatic payment to pay his monthly HOA fee. but somehow something happened and there was a glitch, whatever, and they weren't getting his payments. He came back from being deployed to find out that they foreclosed and sold his house. This is in Texas. As this happened. You ready? Over $2,500 in missed payments. Who does that? Who does that? The guy had to go to court to get his house back. I mean, it was so disturbing. So that's mentioned in that video. So you guys got to go watch it. Anyway, let's see. Well, nice name, mild myocarditis. Okay. I am moving from Queens to Brooklyn for my job and to help with the commute. Should I purchase something or continue to rent? And is this a horrific time to buy? Again, it all depends on your personal situation, your financial situation. If you have the means to do it and it's the right house for you. Now, look, Brooklyn's not cheap. It is not.
It depends
cheap.
on how long you're going to be there. It depends on how long you're going to be there too.
Be there, right? If you're going to just move again in a couple of years, I would just keep renting. But if you feel like now's the time you want to own your own place, then it works out for you and you can afford that monthly payment. Absolutely. But it's your own personal, you got to look at your own personal situation before you make a decision like that. I mean, I can't tell. I'm not like Jen, you and I share a brain, right? We always say that.
Because
we're not those real estate agents that are going to say, buy now, you got to get in the market now because prices are just going to go up. We don't do that. God, no, I will not do that. It's you have to make that decision yourself. And if you decided, yes, this is it, this is what I'm doing, I can do this. I'm going to help you. I'm going to be there to help you. And you as well, Jen. We're going to be there to help our clients achieve that goal. So,
yep. 100%. 100%.
Got so many great comments tonight. Okay. Beth Simpson, I've watched videos saying you could be paying your mortgage, but you get behind in HOA fees. They can foreclose without you knowing. They have too much power. They do. Fortunately, a lot of states are stepping up and the state legislatures are putting laws in place to stop these HOAs from doing that. North Carolina just recently, I think they passed a law. Colorado's doing the same thing. I think Florida's a nightmare with the HOA fees right now. Because of all the rise in insurance rates. Oh, forget it. It's so bad. Anyway, let's see. California has tough HOAs. Mine is in Nassau Bay, Texas, in Clear Lake. Okay. So yeah, it's so this getting back to our assumable mortgage. I think, Jen, that this is I think it is a good thing, right? It gives hope. It gives hope to buyers.
Yep.
It's just a matter of finding, right? You got to find the people who have these assumable loans. But as David Matney said before, now you and I really haven't had personal experience working with assumable loans. Our friend David commented on Jen's live stream earlier saying that he did one last year for a client and it took, you ready? 5 months. 5 months for that deal to close. So he said it's not an easy thing, not an easy process to go through. And you have to have the patience. So
yeah, I don't think, I mean, I would say that is something that could happen, that I don't think that would be something that would, if all the other pieces of the puzzle fell into place, I wouldn't not do it just because of the potential time frame, whatever. But I mean, I think it is super, super important that you do the homework on the property, work with an agent that knows how to handle it and how to present it, because, if it's in the marketing of the seller has that in their marketing plan, they have it out on MLS and all the things. And this is something that they are putting out. That's one thing. But if you find the property and it's not something that the seller is expecting, they're like, wait, what's going on? What do you mean you want to assume my mortgage? I don't understand. You need an agent on your side to talk to that listing agent who can tell them this is how it works.
Yes.
Mr. Seller's they're not at risk. This is the process. Transfers over, so on and so forth. And oh, by the way, Mr. Seller, my bank has already pre-approved me for your loan. Here's the paperwork.
Right.
And I think that, I think, Jackie, the thing of it is like, and we've talked about this, like, not that the glass is half full all the time. and all, everything's rosy. But I do think that if you see something, you want it bad enough and you want to do the work for it and you really dig in, I think some people I think it's good for.
Yes.
I think some people, excuse me, some people are going to be like, you know what, it's too much of a pain in the butt.
Yep.
Not for me. And that's cool.
Yep.
You know what I mean? That's cool.
Yep.
But I think for some people that are just like out of reach, it's like, oh, they're pre-approved. No, they're not. Because the prices keep going up and the prices keep going up and the mortgage rates are not coming down. And they're like, they just can't get a break. This might be the thing that gets them their foot in the door.
Exactly.
Get them out from underneath a renter.
Yep. So, but it could be good. It can be a good thing, but it's just a matter of finding it and having that patience and reading the fine print too. Right.
Yep.
Yep. I'm just looking at, we got so many comments. Oh my gosh. Okay. Oh,
The last one is funny.
Going back and forth. There's a lot of people. What's that?
Joel, look at the last one there. The Joel
I can't afford home mortgage.
Aldrich.
Sorry, Joel. Don't mean to laugh. I can't afford a home mortgage, but I'm able to finance a doghouse. Thanks, Jen. Oh my God. Oh my gosh. Here, Kissy Cat says, we did a VA loan years ago. It paid off. We were so glad. Good for you. Good for you. VA loans, they're awesome.
It's a good product.
It is a very good product. And here's another thing. Talk about agents that are not educated, right? So you want to work with an agent that knows how assumable loans work. But even going back to, and I've said this before, I can't believe how many agents don't understand VA loans. And when I've had buyers with VA loans and they go to make an offer, and if they don't have to put anything down. It's 100%
right.
Oh my God. And
it's
I don't know about that. I'm like, are you really? You've never never heard of this before? You've never done this?
I've pulled out my hair so many times with with listing agents that just so here's a little trick, and I don't know if you've done this, Jackie, but so I do big surprise, do a lot of video, right? So I have a video email program that I use, communicate with clients and whatnot. Very effective. I use it to communicate with the listing agent. So when I present an offer, I will, instead of just typing it out, I will verbally, like I put it on, have a conversation, but then I have it in video and I say, please forward this to the seller. So now I'm removing the agent that might contaminate what my offer is. And it's as if I'm talking directly to the seller so that I can explain it in my words, as opposed to the listing agent who may not know what the heck they're talking about.
Yep.
So if you're trying to buy a house, see if your agent will do that. Video email to the listing agent with their offered details. If you have a situation like this, that's maybe a little bit sticky, maybe a little different, it might make the difference in getting your foot in the door.
Right. Just want to answer this question here, AJ. So I think I missed it. When does this wonderful news happen? So this website, AJ, is available now. The link is in the chat there. You'll find it. It's available now. It's fairly new. They just started this service in September. So it's about
September.
About 7 months, almost 8 months old now. Or no, 6 months old. What am I saying? Yeah. So 7, 8 months.
No, it's May. It's almost June, Jackie.
Okay. Okay. No, sorry. I can't keep up. Anyway,
it's all good.
So click on that link. It's Rome. You'll see that there. Go check that out. It's available now. I don't know. It's not available in all states. I think it's just a handful, like 18 states or 13 states, something like that. But yeah.
Or even the Assume list. There's a bunch of them out there. There's a couple, there's a couple different websites out there.
I put the links
Google,
for both. Yep. Both links are out there. So, Okay, cool.
100%.
I think, Jen, at the end of the day, it's a good option for people. It's just a matter of finding it and finding that home.
I mean, sometimes, hey, thinking outside the box. That's all we're doing here.
Yeah.
Right. They're just thinking outside the box. Like you have somebody that wants to buy a house, who has money saved, who has worked on their credit, who wants to get out and wants to stop being under the siege of a landlord.
Yep.
They just, it's just another tool in your tool belt that might help you. It might help you. And I think that the name of the game when you're buying your first house or you're buying in a very competitive, environment is it's not status quo. I mean, going in just standard offers is not good enough. You got to be a little creative sometimes, and this might be something that could help some people. I think it will. I don't think it's going to be like gangbusters, change the face of real estate.
No.
You know what I mean?
No,
I don't think that at all.
There's not that many out there.
No.
I mean, it's not.
There is not that many out there.
No, that's the problem there. Scott Morrison said $600K can't even get you a starter home. I bought a condo in Long Beach. In most of the county, could have gotten me a new build with a 2-car garage. Yeah, I hate hearing that stuff. It just, I don't like it at all. Okay, the mic drop BBQ. If you want to buy a house, learn how to work on a house. Insurance and warranties will drain you. YouTube home repairs are your friend. Hey, if you ever wanted DIY stuff, watch Jen's channel. Jen talks about that stuff. So which I will share
like that. I
later.
Love me some.
Yeah,
love me some good DIY.
Yeah, you're good. You're good at that. Very good at that, Jen. So, what was I going to say?
I can't read your mind. I don't know.
I want to get back to interest rates really quick. We talked earlier, Jen, about there was a mention that there's a possibility that the Feds were going to drop the rates in June, right? You heard that?
Correct.
Okay.
I heard a scuttle. Yes, I heard a scuttle. They said that they were taking a step back, and originally they said in the fall, and that was very unlikely that it would be in June. But they're now reversing that, and they're very well might be. They're leaning towards a rate adjustment in June. So we'll see what happens when the Fed meets. We'll see what happens when the Fed meets.
Exactly. This could all be just, talk and noise right now. It may not even happen, but I was not happy when you said this earlier, because it's going to put us back into, I think, even a worse situation with these home prices. If they drop those rates and mortgage rates come down, oh my God.
So here's the thing.
Yeah.
And the thing that I've been hearing a lot within our industry is that the first half of the year has been just kind of, abysmal in terms of activity and number of home sellers putting the number of amount of inventory, the whole 9 yards. It's not been like a regular spring market where we have a surge in homeowners putting their houses on the market and whatnot. Mm-hmm. So what I've heard over and over again is the second half of the year will be extremely busy. Will it be extremely busy? It's an election year. There's going to be a lot of stuff happening. It's all like we're, saying that earlier. It's an election year, and at the end of the day, people are going to want to get reelected, so they're going to do things to make that happen. And Jerome Powell is not going to cook his own goose, by doing anything crazy like raise the rates again.
Right. Exactly.
So
exactly. But on the flip side of that, and I said this earlier on your stream, the problem with this, so if they do, right, they bring the rates down, they want to look like the heroes, but then you're raising the prices are more than likely going to go up again because you had all these people waiting. The demand's going to increase. There's still not enough inventory. I'm sorry, an election year, people are not going to be selling right now. I feel that way. People are just going to be,
I don't know
what happens. But here's the thing. The prices are going to go higher. People are going to be more pissed off because now they're like, now we really can't afford a home. What the heck's going on? And of course they're going to point it back to the politicians, and it's just a vicious cycle. And it is a vicious cycle.
And I don't know if, who comes out, Jackie, who comes out the winner in all these situations?
The politicians, not us.
Everyone except the consumers.
Yeah, exactly.
You know what I'm saying? Even, and I'll just throw my hat in there too. Like, I'm not crying poor mouth and all the things. Thankfully, I have food with my meals still. But the Sylvester household is, it's getting a little lean. In 28 years, this is going to be probably one of my leanest years. Mm-hmm. And just because of the situation. So it's hurting everybody. I mean, as a single parent, no other income coming in the house, it's like, but the only ones that are coming out on this are politicians and lenders. So it is what it is, right?
It is.
It is what it is. And Something's got to happen.
Yes, definitely.
Something's got to happen.
Moon Goddess 45. Hi, guys. I live in Connecticut. Prices here are crazy. My poor daughter got a starter house, a grandma house, and it's been one thing after the other falling apart. Most recently, the central AC blew. I'm sorry.
Oh,
That's not a cheap repair right there. I'm sorry. But again, this is what's happening. But people they're just going to buy a house just for the, they're going to take whatever's out there.
You know what a hopping market right now is? A metro is Hartford, Connecticut, which is crazy. I did not even realize. That's where my daughter just graduated from college. It was the University of Hartford, and Hartford, Connecticut came up as one of the metros that are going to see some. It's booming. There's a lot of activity and price appreciation. Very interesting.
Well, it kind of makes sense because you can take the train down to New York City from Hartford, right? So
yep. And I think there's a lot of if I could say that word, revitalization.
Yep.
Going on in Hartford. So
that makes sense. That makes sense. All right, that's good to know. Clark, the realtor, Atlanta, Georgia market soaring in prices too. Some condos down here in Midtown, Buckhead, are in the $1 million price point. Oh, ooh. I remember when back in the 90s, like I had friends, we got out of college, they flocked, everybody was flocking to Atlanta because that was like the place to be, and the home, it was cheap. It was cheap to live down there. So no.
Bonkers.
The mic drop, BBQ. Just sub both your channels, Jen. Oh,
hey now.
Yay. Awesome.
Hey now. Appreciate that.
Look at this, Jen. He just replaced his AC capacitor watching YouTube. $60. My house is cold again.
Man,
good for you.
I flippin' love YouTube. I do so many things. I was actually I was doing some research. I'm doing a curb appeal video, and I had some pavers and stuff. I had some landscaping done about 5-6 years ago, and I live in the Northeast. So when you have pavers, they with the snow and everything else and the freezing temperature fluctuations, that the sand that goes in between the pavers, it eventually deteriorates. So I was watching YouTube, and I'm like, how do I do this? I know there's easy way to do this. There's got to be a way. And so I found a video, power washing, getting it all thing. I ordered my bucket of sand, polymer sand for $25 at Lowe's. I'll pick it up tomorrow and add it to the list of the projects.
Look at that. Look at that.
But it's $25. It's like, if you know,
yeah, as long as it's not a major thing. If it's not a major repair, you can do anything. You can
define major to some people though. You know what I mean? Sometimes even the small thing, it depends on the person. Depends on the person.
I don't know. Some small things could be major to me because I'm just not that person. But anyway, Dan B says Lancaster, PA market is really hot right now, sold in under 7 days. Yeah, you know why? Because Pennsylvania is probably one of those last states that's it's still affordable. And that's why now people are going out there. David, again, just my opinion, if inflation remains high and the Fed lowers rates, we know the Fed is bowing to political pressure. They are, but you know what? It's going to bite them at the end because people are going to be fed up with these high home prices. That's my thing. So anyway.
Oh, they already are.
We won't go there.
Nope.
Not doing it. Not going to do it, Jen.
Not going to do it.
Okay. We have here that car guy, Eddie. Thanks for being here. Lowest in the comps regarding price per square foot, and I can't seem to move it. I'm trying to move into a new build, and I have steep contingencies with the new build. Wow.
So if you're talking about so he's lowest in the comps regarding his price per square foot, and I can't seem to move it. So he must be trying to sell his house, I would assume. So, right?
So if you have, so you're trying to move into a new build, but he has steep contingencies with the new build. So it's contingencies you have to sell your place, I'm assuming.
Yeah, I would, I would probably, when it comes to selling your house, I would absolutely look at your house versus your competitors' homes on specifics. And what I mean by that is do you have anything specialized in your house that maybe is making it less appealing? If hardwood floors is the thing and you have carpet, if you have, a special kind of hot, countertops or paint or anything that might not conform, that could be a reason why people are they're just not interested.
Right.
So that's what I would probably look at.
Yeah,
absolutely.
For sure. He said, he goes on to say here, my realtor may have told me to price it too aggressively, and now I can't do a price reduction to sell it. Oh, yeah. See, I see that's the risk you take, you know, like you can, because the
real
market
estate agents.
I know, but like the market can turn like overnight. You know, you think you're pricing it right, and then whatever happens, it just something happens in the economy or whatever. It's
not his. It's not his fault.
No,
it's not his fault
not.
because he relies on the real estate agent to give him good guidance and provide him, you know, the right information. And I'll tell you, Jackie, that's why I always go super conservative and let the market dictate what the price is. Because at the end of the day, the seller doesn't control the price.
No,
they control what it sells for. But the value, the ultimate value, is dictated by what the buyer's willing to pay. Exactly. So you could price it for $600, which is maybe a little conservative, not underprice it, but fair. And then the market will say, "Oh gosh, $600. That market value is $650." And now you've got a line of buyers, and you end up getting $700.
Right. Exactly. Thomas Sadowski, on a combined income of 130, is $300K a good put down on a house listed at 680? I would say so.
Yeah, that's a tough question to answer.
But I mean, it's a good down payment, but you got to
almost 40%.
Listen, you got to talk to a lender, and you got to see what your payments are going to be, right?
And credit.
And your credit. You have to get, if you're not pre-approved yet, go get pre-approved. You have to talk to a lender and think of, to figure that out, exactly what your payments are going to be. I mean, that looks good to me. That looks good. Like, $300,000 down on a 680 house. Yeah, for sure. But
it also depends on the market, right? Sure. Because the market, if it's in a West Coast market where everything's selling cash or close to cash, it may not be good enough.
Yep.
But exactly. I mean, if you're in an area that is not as aggressively selling, might be a winner chicken dinner.
Yep. Moon Goddess 45 here has another question. Not really sure. I mean, I'm not like an expert on this. If you sell your house before being in it for 2 years, will your capital gains be high?
Oh yeah, that depends. You got to talk to a financial advisor on that one.
Yeah, exactly. You got to talk to your tax accountant and all the things. Don't know.
Yep.
Like that's, and again, it's 2 years. It all depends on how much you make on it too. Like if you
and with the upgrades, like that's the thing is there's so many different tax laws that get involved with determining capital gains. I mean, if you were in it for 2 years and you put in $150,000 worth of upgrades and updates and repairs.
True.
You know what I'm saying? Like, I mean, there's a lot of different factors.
Yep.
And financial advisors, we are not.
No, we are not. We're not lenders. We're not financial advisors, nor are we accountants. Can't help you with that. But Sherry says, need to make sure you have some liquid cash in case of emergencies.
Amen.
Yes. And Sherry.
Well, you know why that's important, Sherry? In case of the zombie apocalypse. We were just talking about that.
Jen is obsessed with the zombie apocalypse. She thinks it's going to happen.
I'm rewatching Walking Dead. I'm rewatching it, and I'm like getting freaked out. Not freaked out, but I'm like,
wonder.
Because you know what? It doesn't matter. House prices don't matter.
Yeah. No, it doesn't. Ivy Roses. Oh boy, we're in Bergen County, New Jersey, and I'm afraid I should have prepared my house sooner to sell. Have my work cut out for me. Want to list it by August, the latest. Afraid to miss out. Listen, don't be afraid. I would get going on it now. The market's not crashing. I mean, as of right now, it could change, but as of right now, it looks like I think we're going to see the status quo. It's limited inventory. And also, I'm speaking here for Bergen County. And if Ivy Roses, if you want to reach out to me separately offline, we can talk about it a little bit more to see exactly where in Bergen County you are. But Bergen County right now, I think it was as of April. It was March or April. The median sale price was $787,000 here in my market in Bergen County. Ooh. It is expensive. So if you are looking to sell, I still think you will do well, even if you went into August. August is not a bad time to go on the market because people want to be in by the holidays. So if you put it on the market, close by October, people do, that is a good time to get back on the market. Usually, so say now from Memorial Day till about the end of June, it's crickets. It's dead. It's because we're entering the summer, people going to the shore, graduations, blah, all that stuff, right? And then come July, like mid to end July, things start to pick up a little bit. And then coming into the fall, we have the fall market, and it definitely picks up.
And you know what? Here's the thing too, Jackie. I think because of the way things are going in the market, because we had an abnormally slower spring market. The spring market is usually the busiest time of the year, and that is historically like May. Isn't it like May 27th or something like that? It's like historically the best day to sell historically over the last 50 years with the highest amount of highest prices.
Yes.
I think we're going to see that in the fall. I think we're going to see that in the fall. I think we're going to have a surge in pricing with all of these things. It's like a perfect storm brewing with the feds potentially, playing with the rate and, people holding off and not doing anything. And then all of a sudden, I think the fall is going to be incredibly busy. So you might be like, you actually might be sitting sweet. But get your house ready though. Get your house started.
Wait, I
never too early to start.
So Ivy Rose they're in Fairlawn. Fairlawn has always been a hot town, no matter what the market. So you're gonna be fine. It's Fairlawn is an awesome town. All right, I want to go back to this. Love Bella says, is buying a condo a good idea? Can you do me a favor? Come back to my channel tomorrow at 5 o'clock because I am doing a video about why you should never buy a condo. And I think you'll appreciate it. Little segue there to this week's video. And that's got some good information there. Buying a condo, I would say right now, and especially if you're going down to Florida, I would not buy a condo in Florida. But go watch that video tomorrow. It comes about at 5. And I hope you enjoy that, and you'll see why you shouldn't buy one. Okay, so let me see. Dan B here says, how much land do you need to build an in-ground pool? It
check the zoning department.
You got to check your zoning laws, zoning department, to see like how much, space. What is that called? What am I thinking about? Is it setback?
The acre? The setbacks or the
acreage? How
much
you have to be from the property line?
I'm trying to read your mind. Yeah, setbacks.
It's setbacks. Right. Thank you.
Yeah. But you also need zoning.
Yeah.
To find out if they allow a pool in the area.
Yep.
And how much minimum.
Yep. Okay. All right. We have somebody commenting here. Kevin. Hi, Kevin. HOA is horrible, but condo may be the only thing you can afford.
Yeah, I agree with Kevin. I think that, I think it's a big depends. It's a big depends because here, I'm going to knock on wood, like the HOAs are not an issue. And I think that the HOA getting into a condo as your first house, it's like a bookend situation. Yeah. You get in your first house as a stepping stone because they are less expensive. And if you get into an HOA that doesn't have all the extra golf and clubhouse and all the other stuff, and it's just bare minimums, it could be a great way to get your foot in the door. So I bought a townhouse, my first place. Yep. And then on the other end, you get into retirement, some people don't want to deal with the grass cutting and all the stuff. And they're just like, you know what? I'd rather just pay a monthly fee and let somebody else do all the work on the exterior and be done with it. So I think it's got to be the right community, and you have to research the HOAs and make sure they have, how long are they seasoned for? How much do they have in reserves?
Yes.
The whole 9 yards. You got to really look at the docs to see, and then make a decision on an individual basis. But I wouldn't blanket say that they're bad. No. Because I think for the right people, they're not bad, but good idea.
But nowadays, so in the video I am putting out tomorrow, the problem is these HOA fees because of the insurance, because of the rise in insurance rate, and a lot of insurance companies are pulling out of even insuring condominium buildings. That's a big problem. There's a lot of places are seeing now, and so like one example, I think it was in Minnesota. I don't know, I forget, but Minnesota, one community, they saw their HOA fees go like from $300 to $820 a month, because of the increase in insurance rates. Who can afford that?
It just that in that kind of situation, you don't buy in an area that has excessive, like the warning signs about that stuff, right? Like,
Yeah.
I don't think that the storm surge, you're going to find that in the Midwest, like, or something
But-
like that. You know what I mean?
But it's all over the place. Yeah, I mean, like, but think about it.
Depends.
Minnesota,
Depends.
But it depends. But in Minnesota, you get bad weather. You get like the bad,
True.
cold, really cold weather, harsh winters, and all the things. So that causes a lot of damage too. So, it
Depends on the state too, right? Depends on the state, on whether the state has limits on how much they can raise the fees. So
yeah, that is true. So if you're going to buy a condo, and I talk about this in my video too, like the tips that I give, you have
Jackie
to check.
knows.
I know. So
Jackie does her research.
Check the documents. Check the history of the HOA dues to see how much they increase every year. You want to see the history of that so you can plan for that. But again, you never know what can happen, and they could jack up the rates, and then you're in trouble. Okay, we got more questions. Oh my God, Jen, we've been on for a while, but I just got to answer these questions.
I'm
so excited.
Hey, my kids are out and about, and
yeah, mine too.
I have, I'm just like, hey, but I will tell you that once it gets to my bedtime, I'm out. So
I know. It's getting late, Jen. I don't want to keep you up late. All right, we're in Jacksonville, Florida, and we have lived in our ICWD view home since 1996, thinking of putting on the market. What are our first steps? By the way, wife is from North Arlington. Oh, cool. So your first steps, putting it on the market, consult with a real estate agent in Jacksonville, somebody that's experienced, that knows the market. Have them come and check out your home and give you a, what do you call it? Comparative market analysis, and to see what how much you can sell the house for. I will
check out some of my videos
and check out Jen's videos.
Can I do a shameless plug? Or I guess I did a couple of that's my channel is all seller content, right? So check out my channel, and I have I would start with decluttering and purging. And then think about packing and staging.
Yes.
Those are the things, because those are the things that take the longest. And sometimes if you're looking at, like Ivy's looking at August, the prices, or even if you're, August or September, like if you're going to be pushing this out and you're in an area where things are appreciating pretty quickly, yes, contact a real estate agent, but realize that it might be a different price, might be higher than where you're at. But more importantly, the thing that takes the most amount of time is the decluttering and the purging and the staging and the home repairs and the maintenance things that you need to address when you're in that process. That can take several months to go through that, especially if you've been in your house since 1996. It's gonna, that in itself is a project. So that's what I would recommend you start exactly right there.
Ruben C says, what can you say about Madison, Connecticut? How does it compare to Bergen County? So Jen is up in Massachusetts, but I don't know if you know.
Massachusetts.
Madison,
I don't know
Connecticut.
That area.
Yeah. Michelle, unfortunately, she's not in Madison, Connecticut. She's in She's in Plymouth.
I wish I could help you. Plymouth, Massachusetts, where the Pilgrims are.
Yes. Okay. All right. One more question, and then hold on a second. Vasco, is it smart to wait to see if prices will ever go down, or just buy now if prices just keep going up again? If you're in a position where you can buy and you need that home right now, and your living situation's changed and you need to buy a house and you have the funds, then maybe this is the time to do it. Don't feel pressured to jump into it, right? Nope. Because you're fearful that the prices are going to go up, because you may have some regrets down the road, and you feel like you overpaid and you got in over your head. Just make sure you are financially ready to do it, and also 3 to 6 months of an emergency fund. Not because of the zombie apocalypse, is because you need things right.
Because you need to have at least 6 months worth of food and supplies.
Yeah, all right.
Just in case.
You're killing me.
No, you know what? I think, you ask yourself your question, and I said this in one of my videos, is that you need to ask yourself the question, if the market wasn't doing what it's doing, and you could, and would you buy now? Like, if you could afford, your finances are set, you've got reserves at today's interest rate, at today's price, if you take out all the noise all the noise, right? Don't know, the market's going higher, market's going lower, interest rates going up, down, whatever. Ignore all that today. If the answer is, yes, I would buy today, then start looking. But if the answer is, well, not quite, no.
Yep.
No, because then you're feeling like you just said, Jackie, like now you're feeling that pressure to be like, oh my God, well, what if I don't? What if I don't? Forget that.
Yep.
You need to forget that and focus on just your household. What's good for you today? And then dictate your next step based on that.
Good advice. All right. Let's do some not shameless plugs. We're going to, first of all, the most important is we want to share Jen's channel. If you are looking to sell, Jen has an excellent channel, Creating Savvy Home Sellers, Savvy Home Seller. She's got some awesome content here. Please go check it out. Subscribe, watch her videos. You will learn a lot. Trust me.
Thank you.
So here's the shameless plug, Jen. We got to do this every week, and
Do it.
Here we go.
Do it.
Jen and I, if you enjoyed watching watching us chat tonight, why don't you go listen to our podcast? We have a podcast called Reddit Real Estate Disasters. And what it is I go and search Reddit for all the crazy real estate disaster stories that people are experiencing, or experience with selling or buying a home. And we talk about it. We talk about it on this podcast, and we share our opinions, and we have a lot of fun. We enjoy it.
We get a little spicy.
Yeah,
we definitely get more spicy.
Gets a little spicy.
Yep.
We you can watch us on YouTube. You can check us out on all the podcast platforms.
All the podcast channels. Yep.
And then I just want to remind everybody, if you would like to have a conversation with me, if you're looking to buy or sell here in New Jersey, or you need a referral for a real estate agent in your market, please click on my website. It's right here. Go down to the bottom and you can fill out the form down there, and I will get back to you within 24 hours. So please be sure to click on that link. It is down in the description box. So, Jen, this is awesome. This is awesome. I appreciate you being here. I know you're exhausted. It was a long,
both of us pulling double duty.
And yeah, it was worth it though. But thank you.
All good.
Thank you so much. Yeah, this is good conversation. So everybody, don't forget those links for the Assumable loans. They're in the chat. Go check it out, and hopefully you can score yourself a good deal on an interest rate. So, all right, people. Till next week, till next Monday, we'll have some good real estate stuff for you. I appreciate you all being here, and you'll have a good week. Thanks for being here, Jen.
Be good. Yes, thank you. Be kind, everyone.
Be kind, be good. Have a good week. And
ciao.